Hey everybody, good afternoon. It's Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for Wednesday, the 7th day of January. I know it's hard to get excited about this grain market right now. We do have a report coming out the 12th. I talked about this today on my posts and also in the letter. You know, corn is in a 30-cent box, right, for 6 months. So I get it. It's hard to get excited about what's going to happen with corn. I have those levels in my letter. If you're curious, we're watching D's corn. You don't want D's corn to go sub 450. Can we get D's corn above 475? If we get D's corn above 475, we might have something to work on actually here on the decent side in 2026. New crop beans, you know, managed to fight back today, 7.5 cents, finished at 10.75 and a quarter. Again, if you didn't want to sell beans at 11 or 11:30, are you going to want to sell beans that if we hit 11 again? That's your decision. What you don't want to be doing is sitting here 2 months from now, 3 months from now with corn, excuse me, with beans down at sub $10. So since we don't have a crystal ball, we hedge. We'll try and defend the best that we can. If you didn't get my letter, I have specific hedges in there. You can protect for a week. You can protect for 16 days, 40 days. You don't have to spend a whole lot of money. There's a couple strategies I like. If you're curious about those, give me a call. I'll send you my letter. 312-638-8868, robinsonagmarketing.com. In the wheat market, you know, we're trying to fight off these contract lows. March wheat in Chicago finished up 7.5 cents at 5.18. Kansas City wheat finished up 10 cents at 5.31.5 after trading down as low as 5.20. I'm looking ahead, and I put this in the letter today. You know, July new crop wheat, July 26 wheat. It's at 5.31, 5.40. You don't want to be in a situation when we go sub 5.25. So you can defend 5.25. You can certainly want to make sure you defend $5 wheat, and hope that we get some sort of recovery. It wasn't that long ago. I know it's hard to believe, but back in June, summertime, this contract traded at 6.50. So, can we rally a dollar? I hope so. When we were back up there back in June, July, it was an opportunity to do something. Hopefully, we get something like that moving down the line. Right now, there is no climate crisis. There is no weather story. There's some rain back in the forecast in South America. No new news today with China, although it's going to be very interesting to see what happens with this crude oil that's coming out of Venezuela. That basically, those guys were, 20 years ago, they produced 3 million barrels a day. I think they were producing something around 600,000 or 700,000 barrels, just because of mismanagement and I'm not going to go down that route, but the place is a mess. And if they can get that production back online, where is that going to go? It had been basically getting scarfed up by Russia and China and Iran for discounted prices. So that, is going to, if that supply actually comes back online into the legitimate marketplace, that could put pressure on prices. And you're seeing that with crude oil. Crude oil traded under $56 today. Did not take out 55 if you're looking at the spot month, which is what I'm looking at right now. If we take out $55, that'll be a new 5-year low. So we're dancing with that level there. The silver lining, I pointed this out in my letter this morning too. You've got a new low in crude. Crude in diesel. New 7-month low. We traded 204. 6 weeks ago, 8 weeks ago, we were at 270. So this is a gift for end users. I'm not trying to call a bottom, but if I'm an end user, I do know that a 70-cent haircut in 6 weeks, 8 weeks, it's something you probably want to be looking at if you haven't filled your tanks up. Take a look at this. We'll probably have a big fight down at around $2 a barrel. We did go as low as 197 a while ago. So that's going to be very, very key there for diesel. So that's the silver lining for diesel or for heating oil futures. They're on their heels. So it's one positive thing about what's going on in the world for farmers and producers. Moving over to the livestock, lower across the board. Are we rolling over? I don't know. We've rallied $35 off the low in fat cattle, or $33. I know we rallied $66 off the low in March feeders. We rallied $10 off the low in April hogs. Just, I've been talking about this in the letter for a while. It was a great recovery after getting hammered on that correction. I don't want to call it top, but I do want to protect that revenue because I don't want to be in a situation again. The big elephant in the room is when and if they're going to open up the uh, border with Mexico. If all those feeder cattle start coming back up from Mexico, I can't imagine that's going to make prices go higher. Correct me if I'm wrong, but if we get more supply, that should push prices lower, right? Unless I'm missing something, unless there's some nefarious conspiracy that I'm unaware of, that will probably is what's going to happen. So if I'm worried about a bearish turn, the simplest thing to watch is be when and if they're going to open up that boundary with Mexico. Today across the board, fat cattle down 220. That was in April, settled at 235.17. March feeder cattle finished down 3.5 at 355.50. April lean hogs finished down a buck 30. It didn't take out 90 cents. It did settle at 90.275, right on its lows though. So are we rolling over? I don't know. I don't play that game. What I do try to do is keep guys positioned and protected in case it does happen. So if you're looking for help, give me a call 312-638-8868. If you'd like to get my letter, take a look at it. It's available on robinsonagmarketing.com. If you don't want to sign up right away, call me, email me, give me your email. I'll send it to you for free for a while. I'll give you a free look, but I'm not doing, 6-week, 6-month freebies anymore. So many people out there just want free information. I do this work every day. It's stuff I've learned in 30 years. You may or may not like it. Uh, you won't know unless you take a look at it, but it is. I do share with you exactly the stuff I looked at, exactly the stuff I learned based on 20 years trading on the floor for my own account, and then for the past 15, 16 years working with farmers and producers. I'm well aware that farmers and producers are up against the wall this year with high input prices and low output prices, but we know that there's a USDA report. We know it's a specific risk event. Um, it's not one of those. It's not a black swan event, right? We know it's coming, so you can hedge for it. It's like if you're a kid, if you're an albino, and you know you're going to the beach for the day, you might want to get some sunscreen. Okay, that's it. This is Chris Robinson, 312-638-8868. Take care.